Mute your mic, please.
It should be good for me.
All right. So I put everything on a site. We're no longer on. I mean, we do have Discord, but mostly everything's going to be on a server site for now. We'll see how well it handles, and then if it gets kind of slow, then I'm going to have to put it on a public server and improve some stuff to handle the traffic. But right now we should be fine. I don't have any slowdowns on my end. So basically, over the weekend and last couple weeks, actually, I've been working on V6, which is just a better algorithm for determining if an option was bought or sold. So that's going to hopefully be live tomorrow for 0 DTE only for SPY. So we'll be able to kind of watch a better improved algorithm. I also have rewinds added to the site now, so you guys can go watch a couple examples from that, and then you can just play them and watch them from Friday. And then I also brought in um, open interest and volume jacks from the option chain, which is just it's fast, it's useful, and you can use it for any expiration, for any ticker that you can even think of. It's live. I made a couple updates today. I added auto refresh, strikes, and kind of made some improvements to the system overall. So before we get to questions, I just kind of want to go over some of the details of what this does, and then kind of go from there a little bit. So Um, for those that don't know, and I'm not going to teach all the Greeks today and go over all the education stuff because that would take hours, but I just want to show you kind of how this behaves. So I added a strike view ladder, which is the same kind of view as this, but it gives you a little bit more details of what's going on under the scenes, and it's just a better picture. So let's pull up a better example. Let's go to, let's try, just do SoFi and go to next Friday since SoFi is a weekly expiration. All right. So yeah, here we go. So I have two categories here. We have open interest and volume. So open interest, for those that don't know, is the amount of held contracts active for that day. But the thing is, it only updates in the morning time from the previous day. So what we're seeing right here was Friday night. So basically, market close, Saturday morning update. So Saturday morning, when things update, this is the open interest held contracts for SoFi. And so what we do is we compute gamma exposure off that, and we assume that retail or the market is selling calls and buying puts, which is the normal standard assumption for gamma exposure. So open interest is good to kind of see the all held positions, but volume is very useful, especially for intraday when you want to watch the market live, as you can see where the market's placing trades actively. And so this was Friday. Friday trades that were placed for uh, the 13th. So you can kind of see real time what was happening. So there was a lot done at 21, which was now the call wall, which is a resistance. So you can check both of these, and these are both on Discord now too with commands. So to do that, I put information on the Discord, but you can go to the same bot. So if you go to GammaMap, you can run, you can do JEX. So SoFi 2026 03 13 for Friday, and you get the same picture. So you can get the same view, and then you can also do JEX volume, which is going to also give you that same picture, but with the volume exposure. Like I said, volume is going to be more useful for intraday, and open interest is more for the weekly picture, or just it updates nightly, but it's good because it's more the true contracts held. Volume is just contracts traded, so there's benefits to both, and you'll get to see those over time and see how they behave. I did put a little bit of information about kind of how to read these, and kind of I went over what to look out for. Like I marked the put wall, call walls, so these are going to be support resistance points um, typically. And then I also kind of gave you a table to kind of look at to understand how delta works, um, and how to kind of determine if what's the market kind of doing it in general at those strikes. So if hey, these are more dominant sold calls at this strike because of net delta, we're assuming, because when you sell a call, your delta is negative. So that's why the deltas are overall negative there. So the assumption that mostly these were sold calls. And then if you look at this other example, NVIDIA, we have right here a lot of negative delta for a lot of gamma exposure. So that right there is telling me that a lot of people are selling calls at 190. So that's how I look at this, and it's good to kind of see where things are building, where there's a lot of interest. So we see 167 has a lot of, interest this week. So it's something to look out for. I mean, right now the market in general is very anticipating downward movement. The VIX is high, so there is a lot of put sellers, but there's also a demand for a lot of put buyers. So there's a lot of skew to the put side right now, which can bring some increased volatility. So yeah, that's really it for the website. It's gonna change over time. There's gonna be new features. I'm really glad that I got rewinds on here, like I said, because you guys will be able to watch and practice watching and studying, and it'll help with your questions and things like that. I'm not 100% certain I'm going to add it yet, but I think I might add a rewinds for this as well for volume, so you guys can watch intraday trading for volume for the option chain, and then also this is for my algorithm, the V6 algorithm, so you can watch rewinds for this. The plan for V6 is just to see how well performance-wise I can keep up, because I run this on my system with every trade. So if SPY does good, I'll add, probably, if I had to guess, probably QQQ next. If that does good, then I'll do SPX, and those will probably be pretty heavy, all three of those at once. But yeah, so eventually once we get to a server system, yada yada, when we grow more, then we'll be able to handle the load for more tickers on the V6 system. It's just a much more improved way to determine if an option was bought or sold, which is very critical when it comes to analyzing dealer inventory, because you need to know what positions the dealers are holding. So I'm excited for this to be live, for everybody to see. Like I said, there is rewinds if you want to go get a taste of it already from Friday's trades, and you can just run these, super simple. So you can see Friday on this example we had Iran. Holy crap, the 41 wall was huge, or 39 wall was huge on Friday, so we were really pinned here all day. So this is a resistance point right here at 39. But yeah, so feel free to watch all these, and then I'll post them daily from the ones we have for SPY, and then I will put these in here so you guys can watch the recaps. So, that's all I got. So I will let
Yeah, I can take it from here. Does anyone have any questions like for Cam before I go into anything I want to say? You can type in chat or whatever you guys want. By the way, Cam, is there a way I can I'm gonna share my screen. Give me a second. Uh, there you go. You guys can see my thing. With commands still works on tickers for now.
yeah, I posted that. The only commands we have right now are just the Jex and Jex volume right now. Dealer does work, dealers I should say, but I only have Coke in the database right now because I was just doing tests with V6. So I mean, if you want to look at Coke for the week, but where's Coke at? I don't know. I was trying to look at it. There it is. If you want to look at Coke in the dealer's command for the week, you can do that, but there's nothing in the V6 database, like I said, so it's only going to be the Jex volume and Jex in the commands for Discord. Now, I will put auto alerts tomorrow if it goes good for the Discord. If I see it's running good on the site, I'll go ahead and put it on the Discord, but everything should be on the site, so.
I what I wanted to say. So I just want to go over, for example, just something how to use it hand in hand with futures, maybe with the rewind thing. Uh, is there a rewind for SPY or no?
No, not yet. I haven't downloaded it all the way yet. Nope.
It's okay. It's okay. Uh, so this is for QQQ, no?
Yes, from Friday. Yep.
Okay. So let's see. Just how we interpret it, as we said, is this still the same as dealer? So negative is more
Yes.
accelerative,
Yes. Yep.
and the positive gamma is, or the positive bars is treated as targets and such and such.
Yes.
Okay.
Yes. And so, wait,
Yes.
your screen stopped
Yeah,
sharing.
I'm gonna say it again. There you go. You have something to say?
Yes. So I was going to iterate on that. So for the for those that don't know, when you have negative gamma from a dealer perspective, when the dealer's inventory is really negative, that means that there's going to be a lot more volatility in the market. When the dealers are holding a lot of positive gamma, that's going to be a lot less volatility. That's when you're going to have a lower VIX. So on Friday, yes, the retail markets were longing calls to 603 and 4 and 5. So if you run this replay, so that means the dealers were negative gamma. So when the markets are longing options, there's going to be a lot of movement. Okay? But if we look at the positive gamma, we had for when the market makers hedge, we had downside for the day, right? So that's why near 2 o'clock we started selling off on QQQ from 603 and 4 all the way down to 598 at the big green bar, as you watch in a second. So all of a sudden, as 2 o'clock came, the dealer started hedging, and boom, it went right to the target at 598, 599, and then we held there at support, and then we ended the day right there at 600. So
I'm gonna
when
just open real quick while you talk,
mhm,
just to say how we interpret it like live throughout
mhm,
the day.
yep,
So at open, what you usually like should do is wait a couple minutes for
pictures,
like that data to start to come in,
hmm,
and patterns to form, right? So
yep,
here, like this is let me go like to, for example, 950. What do
hmm,
we see here? Like for example, we have from 600 up until like the 607s, it's all negative gamma, or
hmm,
yeah, negative exposure to the dealers. And we have below these. Do we treat these as either support or targets, right?
yes,
Okay. And we have on the 608 another positive bar. So
mm,
what I usually do is I'll mark them, right? I'll mark the positive ones, and I'll keep in mind the negative gamma, right? So
yes.
this I'll keep it in mind, okay?
Yes, and negative gamma can be a pinpoint still, not as strong though. Not the market makers aren't pinning it. It's because of how the retail's trading. So if you see negative gamma on this picture, that means that retail's longing options. So that's where the whole market's betting where the price is going to go. So during the day, market makers may not fully hedge right away. So when you see that they're going to hedge, they will hedge, but they're not going to fully. So a lot of them will warehouse their risk till the end of the day. So right here, we're just chopping back and forth all day in this price range where all this negative gamma is because of retail buying options. They were betting the market. So when they're betting the market, there's more volatility. So the dealers are taking on that risk, and there's negative gamma. So there's going to be more volatility. And then when you have that positive gamma come in a little bit, there's some pinning effects with that. There's targets. So they bounce off those walls. Boom, there's off that positive gamma wall. You bounce off it a couple times, and then we have the negative gamma causing acceleration and crazy candles. Then, but if we pause right here, what do we notice? Okay, so before the end of the day starts, and we're getting close to it, we can see that 599, 598, 597, and 596, pretty much that whole area is positive gamma. So right now, the market makers are leaning down mostly. Okay,
Yeah.
and so when the market makers are leaning down, and we have to look at 2 o'clock as a risk time, this is telling me that the potential for a sell-off at 2 o'clock is higher. And so if you watch as the dealers start hedging their risks, and
One
we
second. I'll
start
just
pushing down at 2 o'clock.
So it was like I'm gonna put like let me put a vertical line to around like 2 o'clock, or around where that it's like 155, something like that, that this started to come
Hmm.
in.
Hmm.
So from around 596 to around like 599. So I'll put from 596 to around 599. There you go. So around this time, you see like 9:50, sorry, 13:50, which is 1:50 p.m. to around like 2 o'clock. This was where like dealers were, as Cam said, like they targeting or leaning towards.
They were
Right?
long options
Yeah,
to
long
that
options.
spot.
Yeah. And this also, we like this bar we'll also mark out because it's significant, which is at
Mm-hmm.
so twos. There you
Yep.
go.
And that was our first stopping point with 602.
hmm So let's see how we play out. So we were building value in the negative area, and then what do we see? Traverse this,
Mm-hmm.
and through end of day, this lit up,
Mm-hmm.
598 began.
That means that's also a strong support. That
Yeah,
598 grew really, really tall.
yep.
And right
And
now
we
the interval, yeah, and the interval on this rewind is 5 minutes, so it's all going really fast. I'm gonna try to decrease that to like a 3 minute interval to make it even smoother for you guys to watch. But yes, as you can see, we bounced right off that 598 price point area, and then we held support. So the target was down there near 598. And if you go look at the chart real quick for QQQ, we went right through that zone, right down,
around
right into that
5.
zone. Yep, and it was support. And then you can see the candles. The dealers had to buy there, so they sold to that target, and then they started putting support there because they were balanced in their inventory, and that's how the day ended. Is right there.
Just to clear things up, how do you go about with this info if you're trading futures again? So let's say on NQ, right? Because that's the correlating asset to QQQ. On NQ, let's say we're around like 150 o'clock, something like that. The software is telling us dealers are long options like at 2 o'clock, dealers are long options towards here. Like this would be the first area, and this would be the ultimate area. Did my screen stop? Okay.
Yeah.
Not really sure. So, right. Uh, we know that dealers are long option there. So we would ideally treat this as the ultimate target, like this zone, and have this as a primary target, right? And depending on your trading style, depending on however you trade, the software is just telling you there's downside movement, right? And that's it. You take trades however you like, whatever you do. I personally trade order flow, so I'll take it off a TPO level, of a volume profile level, whatever. It doesn't matter what you trade, as long as you look at the software and you understand what positioning is and where we're going, where we're heading, what regime are we in, etc. That's all you need. Uh,
You want me to share my screen one more time? This will be my
yeah.
final example, and then
Oh, my screen ended.
yeah, you did. So
Oh,
here was Microsoft Friday for 0DT trades only from the same thing. So this is different picture than QQQ. For here, and we had positive gamma. This is all positive gamma. And so there was pinning action, and then we had negative gamma below. So retail was generally selling options this day. So if we run slow, we can just see all day today, 412 was the target, and it grew massive. 412, everybody in the market was selling calls at 412. Okay, so if we zoom out, oops, wrong zoom out button. I guess I don't have, oh, there it is, yeah. You can see 412 is pretty big. So if we run this slow, boom, look at that. As the market started heating up, it got really big. So this was the pinning level for Microsoft on Friday. We weren't going to get above this. The market makers are selling as this gets up here. So as you can see, market makers are long calls to this spot right here. So they have to hedge their deltas, but they stop buying after this. The retail market wants to keep Microsoft down. Which is in their favor right now because the market makers are hedging that position. So everybody in the market was selling their 0 DTE calls to try to make some cash, which I did as well on Microsoft, but I sold my call here actually at the 417 strike. Um, and so everybody was selling calls. They're farming the market. They're collecting premium. Market makers have to be long to the biggest position, okay, and that's where the pinning is going to happen. And so as you watch the rest of the day, you can just see how the gamma exposure changes, positions change. Then we had some spreads start popping up. People wanted to farm the downside, and so what does that do? It brings attention down here. And so when that happens, there's going to be adjustments for the market makers. 412 started shrinking. People got nervous, closed out their positions. More sold calls came in. And then right at the end of the day, I think it's the move is getting ready to come up. Right here, this was a spread. Okay, so, and then market makers pinned right here. So this 412 went away. This is at the very last part of the day. There's some positive gamma down here, but it's a support still. So that's the end of it. And so the market always tends to end on negative gamma, typically. So yeah, that's a rewind. And then, we got SoFi, same thing. If you run this was Friday. We had a huge pin wall at 18.5. So this wall right here is the market selling puts on SoFi. And then they were selling calls at 19. So selling puts, selling calls, and you can just see how we were pinned for the day between these 2 points. Then we had all of a sudden people trying to buy calls in SoFi. So that brought a little bit of volatility, but this wall is still going to be a massive, massive resistance. Okay, and here's what happens. A gamma squeeze in this situation, we weren't breaking 19. The market makers they were not going to let this get above 19. But if there was a gamma squeeze and there was enough buying happening on SoFi to push us above 19, the market makers have to go from selling to buying to hedge their current positions. This would add fuel to that squeeze because this is negative gamma, so we could tread all the way up, okay, and squeeze through this negative gamma zone. So that's how negative gamma works. It's explosive either direction. So here, the market was more leaning up if we broke 19 in this picture right here. And that's how you can look at this. So 19 is a big resistance because how the market makers have to hedge their positions. And yeah, mark your positive zones for sure throughout the day. So yeah, that's how I look at that. And then, like I said, Iran, this is another one you can see exactly the same effect. Usually Fridays, I mean, 0 DTE options, people are going to sell calls like crazy because they're going to collect their rent. They're going to collect the rent. I do premium farming. And so like right here, we could see Iran was massive on the 39 wall. Right here, people were buying calls on Iran to 42 in the market. So right here, there was a lot of bought calls coming in on Friday. Right here, so people were gambling, thinking that Iran was going to hit 42. Sure enough, they got screwed by the market makers because this big wall was a resistance point because everybody was selling calls and this was a pinning magnet. So during this time, there was going to be a lot of resistance. And as you can see, they got screwed. So they started closing out their positions as the day went. Gamma came into play, and this whole day, people were just farming this wall.
Cam, I have a question real quick. Let's say
Yeah.
this positive bar,
Hmm.
the one at the 37.5s, let's
Yeah.
say it's long puts. It would still
Hmm.
be positive, correct?
Yeah. It doesn't matter about option types. Don't matter. I just have it on this replay for when I was doing some stuff. But
Okay.
if you look at this,
Mm-hmm.
if you can see right here, this is a long put wall for market makers, and this is a sold put wall. So this is a spread. So somebody opened a put credit spread right here at the very end of the day. So the market makers have to hedge that. And so that became the more dominant picture. Was this shrunk? Then somebody opened up a spread. So the sold calls, people closed them out, they took profits, whatever that may be. So this wall shrunk and the game exposure decreased on it. This one increased because someone or many people opened up put credit spreads to try to farm the market at this price point. And so the market makers had to hedge it, and they brought market. Now remember, positive gamma on the spread is support, and that's why right here, the spread was in trouble if it broke. But they were hoping that's why sometimes the market makers can be in your favor. It's scary because when you're selling these calls on Iran, you're thinking, man, the price is right here. We're going to get ran over. So how I trade this, guys, when I do my farming stuff is, let's say QQQ. I said I wasn't going to talk much about this stuff, but I'm passionate about my farming, guys. So,
Mm-hmm.
okay. Let's say we had this picture, okay? Let's say we had all negative gamma below us, right? I'm a little more cautious, but this is a Jex paradigm. right? So, and then we had all positive gamma above us. That's some, I need to make these bars a little thicker. That's ugly. But let's say we had these big bars, okay? And price is right here, okay? This is a solid bullish picture from a dealer perspective because you got fuel to bring us up and you got gamma in front of us. These are targets, okay? So this is your typical gamma exposure. What I mean by that is, what is the market doing right here? The market is doing what? They are selling calls, and buying puts, okay? So if you go to if you go to the website and you go to the option chain, that assumption is always the assumption. Look at the picture. Negative gamma below, positive above on every single ticker. We are just assuming that for the option chain. Is that a valid assumption? No. Maybe about 60 to 65%, maybe a little 70 on some days. It's more right on tickers. It's way wrong on QQQ and SPY. Okay, so because as a market participant, people, especially in the SPY, SPX, and QQQ world, aren't just buying puts and selling calls. They can buy calls and sell puts, and so you're just making a blanket assumption because the option chain doesn't tell you whether the option was bought or sold. You can infer a little bit, like I taught you guys, by looking at the delta. That helps. And if you guys want me to, I can make a delta adjusted gamma chart, which a lot of companies do, just to kind of help infer and see that visually without looking at these numbers. You can see it on the chart. But this is a gamma exposure picture. This is a bullish picture if this was true, in the meaning, like, if it's fully accurate, and this is what the market participants are doing, this call wall is the target. This put wall is a support. Okay. Okay. So we got put wall area support, can be a support action because they're buying puts. When the market buys puts, that's bullish. That's in bullish favor for the market makers. Okay. And then you have selling calls, which is a magnet, but also it's sell the rips. So the market makers are going to buy the dips, like right here. They're going to sell the rips. Okay. So they're going to allow it to get up to this big wall. It's going to churn through these points slowly. Okay. Because these are going to be resistance points. And then it's going to try to get to this target by the end of the day. So I don't know if you guys, I don't know how many of you guys watch the market every day. I do. But there's days when we have these days where it's like SPX is just, the market does not want to go down. Every candle, everything just gets bought up. You know, those days we're just trending up. You know what I mean? Like every candle, the market's just going in a pattern. People are buying puts, trying to bet the market down, and they're just getting screwed all day long. Price is just slowly going up. It ain't going quick. It's just slowly grinding up, and then it starts slowing down at targets. Okay, that's what this day is. This is a Jex paradigm. Okay, Friday was it? Yeah.
I'm sorry, just to cut you off real quick. I'm just gonna mention something. The thing you mentioned right here, like how
Mhm.
days come where we're only trending up. This
Mhm.
is so good for futures traders because, like, I used to try to fade these days, right? I used to try to go short these days before knowing the software, before understanding all the option stuff. Uh, Trying to fade these days will just kill you because we're just gonna keep slowly grinding up where you're not get anything from your shorts. So the software is going to help you filter out these, like,
Yes.
whenever you see something like this, you'll know the market is just going to go up. Like, do not fade it. Try to get on board with it going up on the future side.
Yes.
Yeah, go ahead.
Yes.
You can
He's
continue.
spot on. Okay. So, back to it. So what I do is, let's say the market just opened. This is an hour after the market opened. I'm cautious because anytime I see negative gamma, I'm still kind of like, oh, that's fuel. I mean, if we break to the downside more, that could be bearish. We got fuel to the downside. But I open up my spreads pretty far away, right? So I open up put credit spreads, especially when the VIX is higher. Especially like right now, the VIX is like 30. So I'll sell my puts, my spreads, but I'll sell my puts. But I'm cautious more on the upside on these days, especially when I know we're trending up, because I don't want to get my call spreads ran over. So I copy the market. I copy the market and I copy the market makers. I look for the biggest wall. I know that the dealers are going to they're not going to break above this. It's typically, like I said, it's going to be that pinning point. Okay. And so I'll sell, let's say this is 608. I'll go to 610. I may not pay as much, but I'll sell my calls at 610, and if it gets here to 608, I'm just going to be watching. Okay, let the farm kick in. Maybe we're here for 3 or 4 hours, right? You know, if I see we're here for 3 or 4 hours, you know, and I'm making money, I'll take off half, because I know that eventually if I start seeing rolling, meaning if I see another green bar pop up over here, and we see another strike fill, I know that this wall, and then I see this wall decreasing, that's going to give more fuel for the market to break through. Okay, so then I manage my position a little bit. Those are the days we're trending up, and I really, if I see the trend days, I really don't like to sell call spreads, you know, but sometimes I like to form a little bit of a condor to make even more money, but I'm cautious on that aspect. Now, let's flip the picture real quick, guys. That's a trend day. Okay, let's draw what QQQ did Friday. Okay, Friday was the opposite, but you're thinking, well, didn't we go up? We did, but remember, it's different. It's a different type of price action. Okay, it's not a slow go up. Market makers are in the control of the flow of the market day. It's a retail is in control of the market. We are going crazy candles. We don't know what direction the candle is going to go the next minute. It's just insane. Okay. So let me draw what we had Friday. And Friday was a warning. I had a thesis that we were going to sell off just because of the picture. So the market started off in an anti-JEX paradigm. So what we had was we had this, 597, 8, and 9. And then the rest of the market was negative gamma, as we saw. So we had negative gamma, negative gamma, negative gamma, okay? So let's just say this is 605. This was the top of the negative gamma. Okay, so what was happening was price was, it was just going violent. The market in the morning, we went down, we went up, we were trying to figure out if we were going to break above 600. We broke above. Price did this, it did that. There was no clear direction. These are the worst days for, they're scarier for a day trader, because you're going to, one candle, you can be like, wow, I see the fuel. The market's pushing up real fast. Boom, boom, boom. I'm in calls now. Oh, it just instantly goes down. You're like screwed. You're like, holy crap, I just lost $500 in seconds. Those are the days that are scary to trade, as these anti-JEX paradigm trades. Now, these are retail long options. So the market was going to not really pin, because there's no pinning effect in negative gamma. It's just acceleratory. Price can go towards the biggest negative gamma bars, like 605 was a big target, but it's not going to pin. Nothing's going to slow it down. It's going to go up past it, and it's going to sell off. It's going to go past it. So as retail was trying to long options, we were negative gamma. That increases the VIX. The VIX will go up. Volatility increases. You don't know price action direction. And then we had an anti-JEX paradigm. The market makers are still in the picture for the day. Well, as the day progressed, and we got towards the time where they finally needed to take care of their warehouse position, okay, we had this, okay? Price action, 2 o'clock came. We did a very fast sell-off. Nobody was in control. The market makers were. Right to the support. 598 was the big wall. 599 was decent. 598 was your big support. So price came down to here near 2 o'clock, okay? And then it bounced, and then it ended the day at the biggest negative gamma spot, which was 600 on QQQ. So it's the opposite effect. We go this way, and these are supports. If it's JEX paradigm, we go this way. Now let's go to the last two paradigms, right? What is the craziest day of all? Let's take a guess. What do you guys think the craziest picture is for the market? What would be the most scary day ever, as far as just craziness? Yes, negative. Correct. So negative gamma, there's no direction. Okay. This is one of the most common. This is one of the most common paradigms in the whole entire stock market. Okay, is an all negative gamma day. So just pretend. Let's just do this. This might be a lot easier. Yeah. So let's just pretend we're all negative gamma. Okay, all negative gamma for the day. Okay, what does this mean, guys? Can anybody take a guess? Does anybody remember what all negative gamma means from a dealer perspective? What does that mean the market's doing? Does anybody know from what I've taught? Yeah, not someone that's not someone that. There you go. Yes, buying options. Yes, people are long gamma. Okay, so the dealers are having to defend both sides. This is the famous pic. Okay, this picture right here was a study done I think it was in 2018 by Bank of America. Bank of America discovered, I think, don't quote me on this, but 53% of market days for 0DTE are what they call when retail is longing both directions. Okay, which makes sense because that's 0DT trading for you. Okay, Bank of America. Okay, they wrote a paper on it, and so this is where the market's long in both directions. So the dealers are having to defend both sides, is what I like to call it. They're defending both ways. The market's going to swing both ways violently all day long. Okay, so you're going to have crazy candles. You're just going to have you might have it's just craziness, right? It's and what are these days? These are FOMC days. These are news event days. You know, when people are buying straddles where they're buying options both ways. So this is going to be a lot of craziness during these environments when you have all negative gamma. You're not going to be able to really see a target. You don't know where the market's going to go. Nobody knows. It's just craziness, okay? But typically how these days play out is they're mean reverting, okay? So that's helpful to know, mean reversion. So if the market sells off too much, it's going to mean revert back up, okay? That's how I like to play these, is I swing them, swing with the market flows. I don't like to trade the candles. This is not a good scalping day. This is a day where you kind of swing the regiments. Okay, let's go back to this now. What about all positive gamma days? So what is this day? All positive gamma, guys. What is all positive gamma? What does this mean? What is an all? Mm, close, close, but not truly. Yes, people are selling options. Okay, yes, people are selling options. Good job. So during an all positive gamma day, okay, this is when the retail market is just selling options. These are the days when you get that boring, I don't even want to look at my computer day. Like, nothing's going on. The market's just like a turtle. Okay, and during that day, you're just getting the slowest price action. You're going up slightly, maybe down a little bit in circles. Who knows? You're just pinned. You're quiet. And usually those days, like this would be like 670, 675 SPY. And I'm like, guys, we're pinned at 675 all day. You're chopping through here a little bit. You're chopping here. Nothing violent. Nothing scary. Nothing on the news. Those are my favorite days. Correct. These are my favorite days because it's not really bullish. It can be. You know, you could see these bars shrink. You see this bar grow, and you're starting to see some strength, and maybe we get a push up to 676 for the day as the high, and you see maybe a bullish chance at 2 o'clock for a couple targets. But during these time frames on these positive gamma days is the best for farming and best for selling options. Now, every day I try to sell options when I get the right picture, but these are the days where it's like stress-free selling options. You don't really have to worry about targets or your place getting ran over because the way that retail is buying options like crazy, right? So these are the days that I like to sell options, is when I get the all positive gamma days. Okay, the reason why my software, and a lot of people have, there's other companies that do this, is they like to determine who's holding the option. Because like I said, the option chain, what we have on the website, which is fine, only assumes what the positions are. So you're always getting that JEX paradigm. You're always getting that negative gamma below. So you're always assuming that retail is buying puts and selling calls, which is wrong, right? We know that's not true. They can do everything. You can go on your Robinhood app and buy a call, buy a put. It doesn't matter. But the point is that the assumption is you're just always seeing negative gamma below and positive up, which is wrong, right? You're not. That's not true. Okay, this is not always the assumption. So websites like Spot Gamma or Unusual Whales or companies that just show the option chain, is there some truth to it? Yes, there is some truth to it, and it does help to give you a general picture, but it's invalid. You're not going to see the days they're truly for. Like I said, all negative gamma, all positive gamma, you're never going to see those days. Okay, so the point is, you're not going to truly see what the market is doing. Okay, and it's invalid assumptions on who's holding what option. So that's what V6 is for and V5 was for. V6 just improves on what V5 does on determining that more accurately. It ain't a crazy improvement, but it's a lot better. Okay, it's a lot better. And I can show you guys just one final example of V5 Microsoft versus Microsoft and my new software, right? You'll see the difference real quick, and you guys you'll like this. So if I go to Microsoft on V6, so let's run this. You're going to see some similarities between my old algorithm and this algorithm, right? So let's pause it right here. What time stamp was this? 1010. Okay, let's run mine. This was the old algorithm. Let's go to 1010. Okay, so here's my old algorithm. Here's the new. Oops. You can see quite a difference. Similar though. There's a lot of similarity. I mean, you're going to get the general picture, right? But here it's saying that the market is selling puts, and mine is saying selling call. Well, I mean, this is right. So selling puts, but here it's showing selling calls at 412. I don't even show that here. I show a little bit of it, but I don't show all of it. So it's not V5 was not as accurate. It's better than the option chain, but it was more accurate. V6 is just a little bit more accurate. So if we go to like 11:15, this is important. 11:15, I show on V5 the older algorithm 412, and then the market was longing calls. Okay, but if we go to 11:15 on the newer algorithm, I show market was selling calls and selling calls dominantly and selling calls, where I show here no. But the 412 strikes matching, so you still get the same effects, but you're not getting the full picture accurately. So my V6 algorithm just improves on capturing who if it's a buy or sell option. And I can't give away all my secrets, but part of the algorithm is I determine I use the order book from the option chain, and I determine by looking at previous quotes before and the current quote, and I look where the liquidity is eaten from the market maker, so where the orders got swallowed up by the market maker. That's how I determine on V6 a lot more effective on determining buying and selling of options. I'm actually just going straight into the granular data instead of just using the bid-ask approach that a lot of services use and other stuff that does not quite get you the full picture of buying and selling options. So yeah, too advanced. But anyways, V5 is good, but V6 is improvement, but it's a little bit slower to process the data. So it's going to take me some time before I get more tickers out there, and we're just going to start with 0DT only, which, I mean, that's fine. 0DT is the dominant. It's where I make my money. Okay, so 0DT is going to be useful. Is this fine for long-term frame? Yes, because you're going to see the levels build, and it's more useful for tickers. This assumption, puts are being bought, calls are being sold, is true because I'm doing the same thing. I'm doing that. Fund managers are doing what this assumption is showing. I buy my tail risk insurance puts for my clients, and I sell my calls off the shares that I have. So this picture is going to hold true to this. You have to increase it. You have to increase. So the gamma flip level, I mean, that's not, it's, yeah, the gamma flip level, there's an algorithm to that. I could put that in here, but it's just typically where you go from negative to positive gamma. So this would be, you just look at it visually. This is the gamma flip level right here. Just this whole area right here where it changes from this region to this region. So yeah, you can use this for meta.
Cam,
So meta.
he's saying some strikes don't show on certain tickers even when he puts the filter to on. Can you top
Maybe.
up? Can you tell us which ticker? Yeah, which ticker are you experiencing this with? NBIS.
Oh yes, I see what you're saying. Yep.
Okay.
Yeah, I'll get that. I'll
Well,
get that
just
fixed. I think it's because the way I'm filtering, I don't show strikes that don't have a lot of activity on them. So the reason why is because there's probably not a lot of bars that are big on these bars. But yeah, I'll make sure that gets fixed where it shows a little bit more strikes for sure.
Cam Yuck asks, do you track Vanna flows, volatility changes alongside gamma positioning?
We'll look into that Vanna and stuff, but for zero DT, I don't really care about Vanna as much. I mean, that's just where the dealers are hedging their volatility when the VIX goes up and the VIX goes down. But it's more unpredictable. I don't like worrying about Vanna because yeah, Vanna's pointless. It doesn't give me any insight. Gamma's to me more impactful for zero DT. You're new into options. Well,
I'd say dealer, Kawhi, especially if you trade futures. Uh, the dealer when people are selling options, for example, when dealers' exposure is positive, treat them as targets. Whenever there's just negative, you treat it as an area where price would accelerate, would get more volatile. This is the best way to look at it.
yeah, and if you're gonna sell options, like I mean, if you're just now getting into option trading, again, I'm not gonna give you financial advice, but I encourage you not to do the things that I do because I mean, I'm doing this for years. I don't want people to lose money or try to copy my stuff because it takes a lot of experience, you know. And I say that humbly. I just been through a lot. You know, I've been a professional fund manager now for 3 years, and I do this for a living. So um, I can't afford mistakes. So I've had a lot of practice and experience. So if you're going to do this on your own individually, it's going to take a lot of learning things on your own. You can watch YouTube videos all day long. You can watch someone do it. You can read every book under the country, and you know, in the country. You can have the best tools in the world. The only way you're going to get better at stock market is by doing it. And if you're new, you're going to lose money. The truth is, especially when you do things wrong and you're gambling, you're going to lose money. And those are the times that you learn. You know, when I first started the stock market, I never knew what an option was. I never knew this stuff. I was, 7 years ago, I didn't even know what options were. And then so it just takes time. You have to have the experience. Everybody has to have experience, and you can't. Everybody's going to learn their own way, and they're going to learn what is best for them. Yeah, paper trading is a good thing to do. I never did it. I should have, but I never did paper trading. But yeah, so and if you're gonna use the option chain for tickers, like I said, it's gonna be a little bit more accurate than for the assumption that I was telling you about. Puts being bought, calls sold, and it's gonna be really nice to see it on volume, so you can kind of see when the orders are coming through that day, what they're doing for that day. So here we can see a lot of bought calls are happening at 88 for NBIS. So people are buying calls for NBIS at 88. So that's helpful, right? You can see those things. But again, these assumptions aren't always valid. But they are still decently accurate for tickers, just not so much SPY and stuff. Like if you took up Coke, for example, it's going to be decently accurate. Or if let's use Walmart, like let's just use Walmart. Okay, if we use next Friday, it's decent. It's going to be decently accurate, right? So here we got sold calls on Walmart at 121. Okay, we got long calls to 123. I'm sorry. I've said this I've said this completely backwards to you guys. I'm an idiot. Bought calls. I mean, sold calls at 123 and bought calls to 121. There we go. Okay, so sold and bought. So right here, this is the 123 call wall. So this is where the market's selling calls. This is where they're potentially buying calls. Where here it's buying. This is selling puts. Where's the 125 strike? Where did I see that? Yeah, right here, 125. Here's the 125 strike. So here they are buying calls a little bit. And that's probably part of a spread, to be honest with you. There's probably some connection with 125 and 123 there. Because a lot of people aren't going to just buy calls on Walmart. I mean, some people might like to gamble and swing trade Walmart with call options, but I mean, I think swinging call options on tickers can be a little more risky, but there's people that do it. So that's how I interpret this. So I do need to correct myself. I don't know why I said that. I said it. It is correct theory here, but like I said, you don't know the direction, but I like to assume with delta, when you see delta negative on an option that's long, negative delta means the options are being sold. So that's why I'm trying to infer this here. But if we're assuming from a market maker retail perspective, technically, this right here is a market maker sold call because you're assuming, which is not true. You don't know that, but you're assuming. So
Kawhi, for example, yeah, if you trade NQ, for example, you look at QQQ. Uh, as I was showing earlier, I don't know if you were here in the call. I was going over QQQ for Friday, and on the dealer thing on the replay, and I was showing how to interpret it using like negative bars, positive bars. You'll just go back to the recording and you'll look at it. So don't worry. And if you have questions, you can always DM me because that's what I trade. I trade the order flow and I pair it with the software. You know.
yeah, that's smart. Here's what I'm gonna do to make this easier for you guys. I think I'm gonna make the chart for the open interest.
Delta adjusted.
Yes, because it's not gonna be fully accurate. Because again, we don't know if it's market maker or retail sold. So like what I mean by that, guys, is look at this real quick. This is a good example. If we're assuming this picture right here, this paradigm is retail selling calls and buying puts, selling calls, buying puts, then you're going to assume in delta's negative that the market makers are selling calls here at 125. So somebody's longing calls 125 here, which makes sense because if you're doing a call spread, you're going to sell calls right here and you're going to buy calls right here. And so that's where the market makers have to sell these calls. So that's how I interpret that. So what would happen is you would see this 125 actually go negative on delta adjusted to gamma. On my delta adjusted, because then you would see that, okay, that's actually sold options by the market makers. Okay. So long options by retail. And then, yeah. So, and then someone joined. Oh yeah, someone joined. And then here at 119, same thing, right? So here you could say, okay, yeah, if we're assuming they're bought puts by retail, then here we're saying they're sold puts by retail. Okay, so then 119 would go from negative gamma, it would show positive here. That's what delta adjusted gamma is. It's a cheat. It's like you're jimmy rigging it a little bit by using deltas to infer direction on the option, for traders. It's not accurate in the sense you don't know who's actually holding the option. Okay, that's what, and you're not 100% accurate. You don't know the true exposure amount just because delta's there. You don't know how many contracts there were, or yada yada yada. So you can't get the full accuracy, but it gives you more accuracy than just assuming this picture right here. So I think I am going to adjust as a delta adjusted gamma. That's what a lot of people do, and I think I am going to do that. But yes, Jack's histogram is different than convexity. Oh. So, all right, guys, that is all I have. As I keep pushing updates to the site, I will let you guys know. There's going to be more to come over time, but right now I kind of want to slow things down a little bit, let people catch up. We're going to kind of expand the Discord a little bit, let people come in. I'm going to keep working on the V6 algorithm, get things going Monday and this week. And there probably isn't going to be a whole lot of, there's just going to be some improvements to the site, but I'm probably not going to add much features. And just kind of start with this and just see how things go for the next couple weeks. And then, yeah. So I will get that done, and then we can call it good. So.
All right, man. You guys have a good one. Thank you for joining.
Yes.
And Yuk, just a reminder, can you put it on a Google Drive and send it to me so I can upload it to YouTube? Thank you. All right. Y'all have a good one.
Yep.
Goodbye. Goodbye, everyone.